Okay, so now the recording started. So ILPA, International Limited Partnership Association, to which developed the principles for private equity business. Right? So IFRS, that we know, IFRS we have.
Yes, bro.
Again, at the international level, we prepare the financial reporting in IFRS format. So it means IFRS, International Financial Reporting Standard Board, so they share the practices with us. So which we follow that practice, right? Which we follow that practice and prepare the financial reports in that format. And every country, they have their accounting principle, accounting standards.
Yes, bro.
US Accounting Standard Board, UK Accounting Standard Board, Indian Accounting Standard Boards, and there are so many other. Means every country have their own accounting standard boards,
Yes.
which they develop the standards. Standards it means principles. Principles it means the practice which that the accountant can follow and prepare the financial statement. The similar way, in a private equity business, we have an International Limited Partners Association, so which they provide the principle, the codes for fostering transparency and governance. So we actually follow their principle and to prepare, see this, fostering transparency, governance, and alignment of interest for a general partners and limited partners. In a private equity business, so we oftenly use the term general partner, limited partner, limited partner.
Yes, bro.
Yeah, so I would like to brief about general partner and limited partner. General partner, it means the fund manager. Fund manager.
Okay.
Okay. And limited partner, it means investor. General partners, where you can see two categories. One is active general partners and passive general partners. Active general partners and passive general partners. Active, it means who actively be a part of investing and manage all the fund operations as well.
Okay.
Active and passive. And investor, it means investor. There is no any other category. So where you can see the class, right? In every class where they can, or series, class, or every time there will be a new investor where you can form the new partnership agreement, right?
Yes,
and
bro.
bring the investment in the pool account and invest into it. But that is like latter part. The point here is you may expect questions on the general partners and limited partners. What is the difference between, who are the general partners and limited partners? In a hedge fund, we often use this fund managers, but in a private equity business, see, the words are fancy. But the meaning of that word is like very normal. That is fund manager. We know the fund manager who manage the fund activities, who manage the investing activities, who take the investment decisions and do the business.
Yes, bro.
Correct? The similar way, the investor, it means in a normal, in a retail segment also we know, because we buy and sell the securities, right? Even though I'm also an investor, I have invested in Wipro, TCS, Infosys, HDFC Bank, right? And so on and so forth. Even though I have invested some of the amounts in bonds market as well, nowadays the bond has been, the yield of bond has been, increased. Even though I'm also an investor. And let's say if I have a 2 crore and if I invest into the private equity, 2, 3, 4, whatever it is, so the slab is not affected. But at least you should have a 1 CR which you can invest into private equity business. That means private equity fund in short. And then you can also call yourself as, I'm also private equity investor. If you have a 1 CR, I'll suggest you the business.
Yeah.
Even though you don't need to have the 5 crore, but still you can invest if you want, you can start from the 5,000 as well. 5,000, 10,000, depends on the business requirement, depends on the plan, whatever that they have with the promoters, right? They will bring with a plan, they will disclose the plan to us, and then accordingly you can invest that your contribution or amount of capital in that particular business. But the point here is So that investor also we call investor, and this limited partner also we called investor. Why we call limited partners? Because their responsibility with the fund is only limited. They are limited with the investment only. They are not limited with the investing decisions as well. But in a private equity, you can see that agreements as well, where the investor also they enter for in the investment decision. So that the models or strategies that we have, which is leverage buyout or management buyout, and there are so many other things, which actually investor also they can also do the entrepreneur. But most of the time, the fund managers they avoid this conflict because actually that will affect on the decision making capability.
Yes, sir.
Correct. So in short, the point here is you may see the two categories: one which is general partner, and the another one is limited partner. When we say GP, LP, always keep in mind GP it means fund managers and LP it means limited partner.
Limited. Normal investors.
Yes, normal investor,
Investor.
or any kind of investor,
Okay.
Okay.
Yes.
So I'll take you ahead. Please. Okay. So in a curriculum where you can see two terms, right? One which is the general partner, limited partner.
Yes.
The another one is waterfall structure. So we have a two waterfall structure, which is US waterfall, means British and American, right? So in a British waterfall, there are different terms. In an American waterfall, there are different terms. Because in a similar, in a world, the banking business has developed from the European and US market. Grown.
Yes.
The business has grown from the market, so they have their own different culture. Even though in options that we know, we have a European put option, we have an American put option, right?
Oh.
And the difference if you see in option, derivatives or options, put options, put or call option, take anyone.
Yeah.
In case of American, you can exercise at any point in time. If you want
Yes.
that, yes, if you want to exercise, you can exercise. Exercise it means that you can say, hey, I want to exercise, I want to take it, please settle this.
Yes.
And in case of European, only at maturity. The similar way, so it means if you see this, American and European, which you can relate with the private equity waterfall models as well, then you can link it properly, which is the waterfall model, American waterfall model. So which deal by deal model. So it means after every deal, you can initiate the distribution. Right? After every deal, you can initiate the distribution. And when we say European, first of all, return the entire capital plus whatever committed return that you have committed to whom? To the investors. And after that, if you see the remaining amount in the books of account, then you can distribute that. Distribute it means between general partner, GP and L.
Okay.
So in short, we'll see that in an example. Don't worry about it. This is like a theoretical part. Why we are discussing? So we should know that waterfall calculation, theoretical aspect, where you can see this theoretical aspect is required to answer to the question. Simple.
Yes, sir.
And the calculation part, which is required to understand it. What is waterfall? So we'll see that in the next session. Next session depends on this or the terms and all. Right? The important terms plus the calculations and examples and accounting entries, everything will be there, even though we'll discuss about the pricing model. A number of things will be there. Don't worry about it. So, deal by deal model, it means basically the American model which support to the investor, that the general partner.
Yeah.
And the European model which support to the investor. Because we are actually repaying entire thing to the investor first.
Okay.
And after that, the general partners, they are claiming for a commission in short, yeah, just for understanding purpose, you can say. So after every deal, in American model, after every day, a deal, general partners will charge commission. But the European, to pay the entire capital and interest payment to the investor, and then after, general partners will claim for a commission. Hey, can you please offer my commission? You had committed. For example, now let's say we both are entered in one agreement because I'm your trainer, you're my client. Now you're happy with my teaching and you said, hey, if you can cover this labor within 2 weeks, then I'll offer you 5,000 extra.
Yeah.
Apart from your normal fee.
Okay.
The similar way model work here as well. Normal fee, it means it's a management fee. Normal fee, it means it's a management fee that every fund is entitled to pay, right? Or because that fees which transfer to the admin, right? So where you work with the admin, then after you receive your salary, correct? Fund admin, which they are responsible for, accounting and reporting activities, correct?
Yes.
And when you join the fund admin, and let's say the fund is not able to pay the management fees to you or to the managers, then see who can bear your salary and all. Which means there would be mandatory expenditures as well as voluntary expenditure as well.
Yes.
Voluntary, which is to offer commission, to offer reward, to offer bonus,
Okay.
to offer any other. Let's say I'm happy that I'll allocate 2 more sessions to you where you can ask your doubts because you are one of the best clients. You have referred someone, and I'm happy with that.
Yeah.
So I'll allocate 2 more sessions to you, but I'll not charge anything.
Yeah.
So what is that? It's like a bonus, right? The similar way, if your fund achieves the target, predefined target, in that case, the fund that the investors or limited partners, they offer commission to the general fund. So that commission part will come into picture because waterfall, it means to initiate the return of capital to the investor. To return capital, invested capital to the investor. So that process we call waterfall. Okay. Basically, this is in short return of capital process. A return of capital. Anyways, we'll see that in a discussion. When we'll take the example of this practical example of this waterfall and all. Then calculation of carried interest. So do you know anything about incentive fees in a hedge fund? In a hedge fund or mutual fund, we offer some a commission to the fund manager. If the NAV perform or reach to the next, let's say the investment price is 100 or investment NAV is 100, and next quarter 1 now, let's say, ended up, and now we are calculating the NAV, but when the investor will invest, so the fund manager committed to them, when they had invested, the fund manager committed to them, if the fund is able to generate the alpha or maybe to reach to the 150 level or 150 net asset value, then after, can you please offer the commission to us on a 50 rupees? Because nobody will pay the fees, incentive fees, or any commission on capital. As simple as that. Because 100 is the capital.
Yes, bro.
50, that is a gain.
Yes.
On a gain that we can pay the commission, right?
Yes.
So the similar way here with a private equity, we calculate carried interest. Carried interest basically to pay, let's say, the fund invested the amount in IRCTC let's say fund invested 100 crore and after maturity IRCTC repaid, which is 150 now. So it means now fund received 150 rupees, right? So once you received 150, the fund needs to initiate the waterfall or initiate the distribution process and to return that to the investor. Return the capital, which is 100, and again return the committed return, which is 10%, 20% on an annual basis. Return that also. And after that, either you can claim for a carried interest or before that, so where you can see the one more term, which is catch up. Catch up basically, again, it's like incentive. Incentive fees, it means, or commission. For your understanding, you can see it as a commission. First of all, pay the cap principal plus interest payment.
Yes.
And if you see the amount, then charge the commission. That commission you can call catch up.
Okay.
And after that, again, if you see the remaining amount, after charging, the catch up would be around for 50, 20, depends, 50 or 20% on the remaining amount.
Yeah.
And if you see the amount in the books of account, so that you can split into 20% and 80%. 20% will be for general partners and 80% will be for limited partners.
Okay.
So that you can transfer. So this comes under the calculation of carried interest. Carried interest basically, see the interest it means, so they are, means the general partner, they are interested in the last leg of the fund.
Yes.
Why?
Yes.
Because they are also investor. They are also means putting their effort and they are interested in the last leg of the fund as well. Okay? Because the profit should be shared between the two. The limited partners, they are the passive ones, and the general partners are the active ones who are actually investing the time, effort, system, everything. They're managing all the operating activities and all. And that's the reason they are interested in last portion or last leg of that fund. And that leg we call carried interest. Recycling of distribution. Recycle, it means, so every in a normal fund, what happens? We receive subscription, redemption. Once we receive subscription, we invest, right? Then generate some alpha and then redistribute or send it to the investor through the redemption. That happens the similar way in this private equity business. We see the recycling of distribution. Why? Because the private equity fund, they invest into a number of companies.
Okay.
After maybe every year, maybe every quarter, you can see the investment will be mature. So means the fund or the investment will receive, cash will receive to the fund, and that cash the fund needs to distribute to the investor. Or else, even though they can invest in any other company as well, so that depends on the agreement between limited partners and general partners. Because eventually it is a partnership business. When we say partnership, so where you can define each and every terms and conditions, discipline, everything means everything. And then after you can enter into the business or transfer the fund to the business, and then that's how you can operate the business. Okay. Clawback. The word clawback, which is very fun. Clawback. But here the clawback, it means when the general partner received carried interest. When the general partner received carried interest, let's say the general partner received carried interest in private equity investment. 100 crores or 1000 crores, let's say.
Yeah, we process fund companies also, bro, in our financial statement process. So I had already heard like general partner, limited partner, but I don't go. I didn't go to depth. Why? What is general partner? What is limited partner?
Mm-hmm.
In process, we no need to use in our
Yeah,
calculations.
I know, I know.
Yeah,
So private equity funds, right? So
yeah,
they raise the funds from, let's say, X, Y, Z. 500 crores from X, 250 crores from Y, 250 crores from Z. The
yeah.
investor, they are the investor,
Yes.
and these are the investment companies.
Okay.
Let's say every company, so we have invested around 200 crores. These
Yeah.
companies will be from different sectors, different economies, right? So there will be different other parameters as well. Randomly, we cannot pick up the company and directly invest on. We'll have
Yeah.
a model which we actually evaluate the business, competitors, revenue, everything, asset, liability, asset quality, everything that we evaluate, and then after we take the investment decisions and investment choice.
Yes, bro.
200, 200, 200. So now you can see the 1,000 crore that we have raised from the investor, and we have invested in the different companies A, B, C, and D.
Yes.
Let's say today this investment has been mature. Mature, it means the company now has been listed, right?
Okay.
So, through the IPO event. And once the company listed, it means we'll receive this amount, 200 crore plus value. This was the invested amount, and let's say the current value, which is 500 crore. So the A company returned the 500 crore to the PE fund.
Okay.
So if you have received, as a, let's say you are the fund manager, if you have received 500 crore, then you will have two options. One, you can again reinvest.
Yes.
It means find a new business. Let's say EF. Now we found a EF business, so you can invest 500 crore in EF business. Or else, let's say you don't have any business plan, and as per the agreement, it was mandated to return that once the investment matures, return that amount to the investor, this investor.
Yes, bro.
Then once you receive, so first of all, return the capital plus their committed return to the investor. Or else invest. If you invest or if you distribute, so that everything should be, that a recycle should be highlighted or should be given in the document, should be discussed, should be highlighted. Accordingly, you can follow the principles and operate the private equity business. Correct.
Oh.
So private equity, they invest into a variety of companies, and let's say company's investment matures, it means private equity fund will receive the amount. So that amount you can distribute. Distribute, it means return. Return to whom? Investor.
Investor.
Return of capital to investor.
Oh.
So how you can return? As per their portion, investment portion, or against their contribution, just calculate in a percentage. Let's say this is your 100%, so it means 500 would be 50%, right? So 50% of 500 would be around 250 crore. Return the 250 crore directly to the. There would be different strategies, okay? But that strategies we'll see in the example. But in short, just we are discussing about the overview of the. So 250 crore that you can return to the first A investor, and then after that 125 crore to the Y and 125 crore to the Z. So this would be your total 500 crore. So you can repay the entire capital plus committed returns to them. And let's say again we have received 500 crore from this business as well. Again, this business also listed. This business also listed. So you can repay their entire, repay the entire amount, 250 crore, then 125 crore, and 125 crore. So here, if you see, after second distribution cycle, the entire capital that we have paid, right?
Yes.
And
Yes,
what
so the
about
1,000.
yeah? So what about third company, fourth company, fifth company? Still, you can see the investment in a, let's say this investment now is in loss, and only the 100 crore value that you are paying.
Yeah, sometimes it may
Yeah,
happen.
it may happen. So here with the D company, the value again which is around 600 crore or 500 crore, let's assume it. And here again you can see the 500 crore. So total you will receive 1100 crore. That once you receive 1100 crore, see, still here we have just returned the capital, right? But again,
Yes.
we'll have to return the preferred return, maybe 8%, 9%, whatever it was committed. So return the preferred return as well. And after that, you can initiate the commission part. So that commission we call here as a catch up and carried it.
Okay.
Because after that we'll receive some amount, but that amount, it means, so actually the value of an investment which has been multiplied, but as per the commitment we have written the capital plus preferred to the investor, but still we are seeing the amount in the bookship account. So it means that amount, see, even though if we don't pay the carried interest or catch up, then you will have to pay the fixed incentive fee, which is up to 20% or maybe more than that to the investors, the general partners directly then. Otherwise, why they will do this business? Why they will help you to multiply your assets then? Now you see your profit, so 8% on a 500, almost it would be around 35 crore something. So that you will receive, right? Every investor will receive that amount, and apart from that, you will receive the other 11,000 crore. And if it transfer entire amount to them, then as a fund manager, why we are doing this then?
Yeah.
I'll not do this. I'll not take this assignment. Why should I do this? Because I'm also looking for value, right?
Yes.
Sometimes you may expect a question on this. So why the fee, that is carried interest, or maybe that the incentive fees and all that, that is important one. That is the important one because it's like a motivation for the general partners. Otherwise, why do you do this?
Yes,
No
bro.
one will offer the services in free of cost. To find a curated business, to deal or to negotiate, to deal with it, to build the setup, right? To build the entire system, to manage the fund business and all. It's not easy. At a process level, we can't manage and see at a organization level. It means to set up or establish entire setup and operate the business. It's not easy. Simple. But yeah, so actually, we are looking for a clawback. So what is a clawback?
Yeah.
Okay, so let's assume it. So there's two investment now become zero. So we are not able to generate anything from this investment.
Yeah.
So till here we have just Sanji.
Return of capital.
Return of capital only.
Yeah.
Okay, so one more thing. So we'll assume it not in this example. Next example we'll have to take it. Okay, we have this A, B, and C. Again, so that same example I'll consider. Let's say we have received 500 crore, 500 crore, and here also we are saying some value. Let's say 100 crore.
100 crore.
But if you calculate the investor's portion, let's say total investment is around 1,000 crore.
Yeah.
10 to 8% as a preferred return. It goes
80.
around
80 crore.
1080, right?
Yes.
Then let's say this is a deal by deal model. Deal by deal, it means
Every time we
this
can.
deal, yes, this deal has been mature. Now we are initiating the return of capital, right? And as
Yeah.
well as we'll charge the catch up as well. So it means first of all, we'll return the capital. Let's say the capital which is 1,000. Let's wait. It means if you received 500 crores, that you can return to them, but instead return entire amount, because the amount invested in a different means here in A we have invested, B we have invested, C we have invested, right?
Yes.
Next again, 200 crores, 200 crores, 600. See, after, let's say, after first company matured investment, and now the fund is initiating the distribution process. If we initiate the distribution process, so we can first of all return the capital, right? And then we'll charge 8%. That is the normal process. But in this business, we have invested only 200 crores. Correct?
Yes.
So in this business, we have only invested 200 crores. So it means we'll return the 200 crore plus 8% carried interest only. Correct?
Yeah.
So it goes around something 216 something.
Yes.
So first of all, return the 2186, or I would say instead that if you receive 500 crores, return the 200 crore, 300 crore will be there, then return the 16 crore, because this is would be the interest payment. This is the capital one, and if you see the remaining amount, which is 284,
284.
directly charge catch up, which is 20%, right? Calculated. If I have a calculator handy. Two eight four, and so let's say 20%. I'm assuming the catch up rate is
Yes, bro. Around 56.8. Yeah.
256 crore. So means minus the catch up, first catch up. Two eighty four minus 66. 228, right?
Yeah.
And here again you can do the split, which is 20 and 80. 20 for GP and LP.
Yeah.
If you do that.
Bro, that catch up will go to investors or our fund company like general partner.
General partner. The catch-up, carried interest, that all will receive to the general partner.
Okay.
But if you, let's assume it, okay. So here we have split this 20 or 80. But after that, if you just go above and check it, here, the one investment that is in loss.
Yes.
All right. First and second, that is in profit.
Yes, bro.
But if you pay the catch-up and carried interest, right?
Yeah.
On both the investment that you can calculate, so definitely there will be a short of amount. So which will not be up to that 1,000 crores and plus 8% means, see, the total amount should be received to the 1,080 to the investor.
At least. Yes.
At least.
Yes.
If it is not, it means the investors can claim the amount from the catch-up amount, that is 56 crore, which received to the general partner. So it means the general partners will return this catch-up amount to the investor. That process actually we call clawback.
Okay.
If there is a short of amount, let's say whatever it is, but yeah, so entire this amount will be paid to the investors back, and that is depends like how much amount they can pay. Maybe the general partners can pay the amounts to pay the taxes and all. So there will be different treatment. But in short, the logic is, so this 56 crore will be returned, or maybe some portion of 56 crore will be returned.
Yes,
to
so
the
that
investors. That is different. Okay.
yes.
I hope now you got this idea about clawback.
Yes, bro.
And if someone asks, simply if the catch-up received to the XYZ fund manager, and let's say at the time of call the distribution of capital, if you see the short on the then the return of capital process, then the amount will be processed to the investors from the catch-up amount which received to the general partner. Simple.
Yes.
Then management fees. Management is basically that the fund charge to operate the fund, or to manage the funds and all. The charge to operate the funds or manage the funds. So 2% or maybe up to 2%, 1% depends on that. The management charges, management fees, or that the charges, those are not fixed, right? But now we have that is the rule, which is 2 and 20%. So 2% basically management charges, and 20 which is incentive or carried interest. But those are not fixed. Those will vary from investor to investor, because this is like customized investment solution. That's what we call it, alternative investment solution. When we say alternative, it means it's a customized plan.
Yes.
Okay, it's a customized one. So you and I can come together and design the agreement and invest the money into the different business. So it means we can define the terms and conditions. We can define the management. We can define the clawback, recycling of distribution, calculation of carried interest, waterfall. We'll define everything. Okay. Then fees income beyond the management fees. So for fund managers and also beyond management fees, you can see so in some extraordinary cases where they pay the fees as well as the income, right? Or I would say the management fees that always that we cannot pay as an income, right? Where we'll have to mitigate all the expenses and all, admin fees, different other expenses, traveling expenses, conference expenses. There would be a number of expenses. I'll provide you the list of expenses, right?
Yeah.
And apart from that, the reasonable organization and partnership expenses. This is a very important one. So which every expenses that we record in the books of partnership.
Okay.
Every expenses we record in the books of partnership.
Yes, bro.
And that's what we are here to record the expenses on a daily basis in the books of fund. So your job is to ascertain that you are recording all the expenses in the books of fund on a daily basis, and you are allocating that expenses and income to the partner's account as well.
Yeah.
That's where the partner's allocation come into picture.
So that management fees, from where they can collect, like from investors or
Invest,
who?
invest.
Okay.
Investors pay fees, management fees, incentive fees, every fees investors will be paid because that the investment is belongs to the investor.
Yes, bro.
Okay.
Okay.
Then apart from 2 to 3 terms should be there, general partners commitment and ownership. Means general partners will work as a owners or promoters and will manage all the activities.
Yes, sir.
Commitment, it means general partners can contribute the capital as well as they can run the business as a owner. Okay.
Yes, yes.
Fund terms and extension, because every agreement carry the fixed terms. Okay. 5 years, 2 years, 3 years. So partnership, it means that the agreement will expire certainly someday.
Yes.
And that's what we call limited liability partnership
Partnership.
or limited partnership.
25.
So partnership is for a limited duration,
Yes.
and that duration we call fund term. And extension, it means you can extend the duration, but that should be also predefined for how long you can extend it. Let's say max to max for 1 year, maybe 2 years, not more than that.
Yes.
And the other vehicle investing alongside the fund, it means it is a pool, that is special purpose vehicles and all. That also where you can see. So apart from this fund, you can run the vehicles and invest into it, or run that vehicle. And apart from that, the time, attention, this is like key persons, identification and changes to key persons, time, attention, key person trigger, process to resolve, general partners removal and replacement, fund management. So this can be a point by the even investors as well sometimes. So they actually voted, cast the vote for a general partners and they appointed.
Okay.
So this business works like the way the private or public limited companies work, the similar way the fund business works. There is no change in it.
Okay.
And apart from that, so from a preparation point of view, accounting preparation point of view, I would request you to refer the 11th and 12th standard partnership accounting chapter. Go through it, do the practice from the scratch on accounting entries, preparation of main ledger, sub ledger, then the other like trade book, P&L, trial balance, right? Fund flow statement, income statement, partners account. So do the practice of that chapter as much as you can, and then you can see the benefit. In a private equity, the words are fancy. Words are very fancy. But the meaning of that word is simply we are bringing capital from the investor, we are investing, and we are returning capital. Simple.
Yes, sir.
First step is bring the capital, invest that into the different companies. Company will return the capital or the value to you, and then distribute that value to the investor. And if you see any expenditure, record that expenditure in the books of funds as well as record that expenditure in the books of investor also, or maybe that the partners who are the partners. Done. So there you can see the terms, but yeah, so I'll send you the documents for this, and then we'll start to the not today. Just a minute. Those are the popular terms where you can see in the there is private equity. Okay. So The next session will again try to cover the another important terms about or other important terms about the private equity and all, right? And then after we'll start with the examples of waterfall model, fees calculation, right? Then the internal rate of return and other portion that will cover, accounting entries. There would be a number of them. Okay. This was just like introductory part. We should know it. What is clawback? What is management fee? Because once we start the calculation, we frequently use that words.
Okay.
Clawback fees, then the admin fees, incentive fees. There are different fees as well. And if you're not aware about it, then there would be problem.
Yes.
Okay. So side by side, just refer the 11th and 12th standard accounting book and do the accounting preparation, I would say. This is very important.
Our accounting standards, right?
Yeah.
Indian accounting standards.
Yeah, Indian accounting standards.
Sure.
At least cover Indian accounting standards. Okay.